Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking currencies, talking yen future today. We have a little bit of a two-day rally going on in the yen, a little bit less of a rally today than we saw yesterday, only about 12 basis points higher in the yen futures, the December contract. Again, yesterday was about 0.25% higher, this one a little bit less than that, 12 basis points. And the yen may be showing a bit of a base though, simply because of where it's rallying off of and the two-day nature of it and the fundamentals behind it. We're in the midst of a 5-week, including this week, sell-off in the yen versus the US dollar. So any news is good news for the longs. And if we can get that base building up, there's a couple of moving averages we need to get through on the technical side before it's believable that this could be reversing. But non-farm payrolls was out today here in the US, and this number had enough in it to show a potentially slowing down of the Fed rate hikes. Now, no change likely to the December rate hike. Probably not a change likely to what is starting to be an anticipated March rate hike, but maybe the path of rates further out than that. We had several Fed speakers today, most of them echoing the same thing, that they feel confident about the economy, but even their long-term target for inflation is below that level, so they're comfortable with what the rate path is now. So even if they get a little bit less aggressive, we are seeing the dollar index down 2 days in a row. If the Fed actually slows down the current pace of rate hikes and at least doesn't add any more anticipated rate hikes, then that could help the yen rally a little bit more than it has. And there's also a little bit of a flight to safety in this particular yen move. Part of this two-day rally has to be a flight to safety because you're seeing it in gold as well. You're seeing it in the Swiss franc as well. And what would that flight to safety be from? Well, the bond yield rally that we're seeing. Bond futures much lower. Over the last couple of days, much lower, 11 to 12 basis point moves across the yield curve in 4 days. And that's about the same move in yields that we saw over the prior month of September. So it's a pretty aggressive move in yields. When that happens, the dollar should get a little bit stronger. It's actually fallen, and that's because a little bit of this makes traders nervous, and you get an immediate flight to quality. You get money going into gold and money also coming into the yen. This is Bob Iaccino talking about a two-day yen rally from the CME Group trading floor in Chicago.